Welcome to the Breakfast Club. It's a long weekend. I'm not expecting to see much action in the markets today, but I thought I'd pop on anyway and kind of give you an idea of where I expect or would like to see this market to move this week. So you have a bit of an idea. Let's see where we're at here on... we are live. Okay, good. I don't see anybody in yet, but that's okay. This will be my rundown for what I see coming. So let's look at the daily here. All right, let me just clear up all this. Close this for now. So if we're looking at the daily, we're looking at this whole range here, right? And you see how we've already come back into come back over 50% here of the range. So we come back to the premium and then we've quickly pulled away from that. So I like that idea as a run lower. We opened up this weekend. So we dropped down. We haven't broken back through this level. So if we come back to here, I don't want to see us get through that on the upside. So that's my upside limit for now. For remove all this stuff here. For now, all I want to see is if we do come back up into this range, or the smaller range we've got here, this is the highest I want to see it go. I don't want to see us reaching for this stuff. I want to see that left in place now. I just want to see us, ideally, let's clear the charts so it doesn't look too messy here. Good morning, Hadid. How you doing? You enjoying your long weekend? So in this range, we're above 50%. We've had a nice pullback from Wednesday, making the high last week, to a nice big heavy drive down. We've got through the mean threshold of this candle. We've closed below that. And now we've got this little sibby forming here. I don't see a reversal in here. So to me, this is like a false run higher. Unless we break this high here, I don't see that going higher. I see this potentially coming up to here. And like we said, that's our no-go zone right there. Oh no, sorry, it would be right here. That was an upside target. This is the guy we want to see right here. This is the no-go zone. So I've got 3 key levels there. On the upside, I don't want to see resistance at. We've got our bull trap here. You could say it's buried inside this one. So if we did see this, let's say tomorrow we get a run like this, here, here, pop up there. We could see it come down into the midpoint here and then leave. If it does these quick runs, like if we see this heavy run here, we see it come back down, I want to see that 50% hold. Otherwise, this can come all the way back down into here. So this has got the flexibility run up and down here. If this run tomorrow goes like this, we run straight through it and we come back to here, that'll be the no-go line. And if it breaks that, then we're looking for a retest of this down here. So this is the potential if this takes off. Now, I'm not suspecting that right now because, like, as I've told you before, there's many PD arrays to reach for. So to reach for PD arrays up here as a box-to-box trade, here's your box, and we haven't even traded through it yet. And it's not really on a swing, so it's not super valid for me. So in order for the valid one, you'd have to break this here. That's the larger range. So that would be box to box there. If you expected, like from here, if you hadn't expected that to go higher, or you wanted it to go higher, it should have done it from there. So that leaving, you could have been totally positive on that. You would be excited. Then all of a sudden it stopped. And now we've got this huge close back through here. So that candle alone tells me that we're not heading higher for now, as I see it anyway. If we go here, I want to see, here's the other alternative. Come back into here. And then I want to see range extension. Then I want to see continuation. So this one here should actually be up here. So this is the one I want to see. Revisit here, drop it down, give us our range extension. Then I want to see a retest off of this candle. It's low. It's mean the middle of the wick, the body, top of this here, all the way back into that. This is all open zone now for the continuation. And then I want to see this thing shoot straight down from here. I want to see us get through this level, come back to this level, and then keep going like that. That's what I want to see. I want to see this area get used as support as well. And that's the potential for this piece here. Could come back up into there. So once that one goes there, this retest can come back into that zone there and then set it lower. And once we break through that level, it's another rinse and repeat all over again. So that's kind of what I'm expecting to see this week. And we'll see. Those are the two objectives I have this week. How you today, Darren? I'm doing good, thanks. I'm doing pretty good. Thank you for asking. And your family's good? Everybody's good? Daniel's good. He's enjoying his day off of school. Good morning, Hans. Is that kind of how you see your week lining up on the daily, Hadi? Similar fashion, or have you got a different idea? Let's look at the 4 hour. The same way. Okay, we're on the same page. It's good. All right, so on the 4-hour chart, if we look at the 4-hour chart here, what are we seeing for logic? Where's our go, no-go zone? It's right here. And the template we'll put as a 4-hour. This is the no-go zone. See that? We have this little range that we're in here. We've traded through it right here, and we took out the breaker. Then what we want to see it trade back to the breaker and continue going lower, right? So that was the trade back to the breaker on Friday, right there, inside the go, no-go zone, because we've broken that on the downside, right? Then you want to see a retest of the no-go zone, and that there's the confluence, there's the overlap between the 4-hour reversal or 4-hour continuation no-go zone and this breaker. The breaker's touching the top of the no-go zone. See that? Comes right back up into it, tags it, and then we started to go lower. Now this little bump we've got going on here. So what we have to see now for this to continue on is we've got a little BISI down here. That's been filled completely now. And then we got this pullback to a logical level. And then what we want to see is this roll over and go lower. Now, for the next 4 hours or so, if this is going to 8 hours, 12 hours, whatever, till tomorrow, if we've got this fluttering around going on in here, we've got logical levels that can still bounce around on. So we can stay inside here, wick up into here, which is that daily level we're looking for. Oops. And then we'd like to see that roll over and go lower. So it's got to get now through, it's got to get through as a no-go zone for the 4-hour. It's got to get through a daily level. It's got to take this breaker out. So your ultimate line in the sand is this mean threshold right here of this candle. So if we close above here, and wick into that, I'm still relatively bearish, because if we take the, I'm losing my love for it though, because it's crossed over the levels that I want to see get crossed over. And that mean threshold puts us just above 60% there, right? So that's what you want to see for, if it does come up, hits this. Again, I don't want to see it even come up that high. Tag the edge of the 50% mark. That's cool for me too. I'll take that. Just wick up in there as long as the bodies stay inside that no-go zone. I'm still looking for this to go lower. So if Kevin's in here, I don't think he is. Morning, Abs. We had a little debate on Friday about he wants to see it go higher. I want to see it go lower. So I'm just giving you my narrative as to why I want to see it go lower right now. And like I said before, I reserve the right to change my mind if the market shows me something different. But right now, I can't see bullishness. I see bearishness. So here's your 1-hour chart. Oh, first of all, let's look for where are we going on this 4-hour then. If we take out this candle here, so what you want to see now is you want to see it drop down in here on a 4-hour, come back up, and I want to see, like right now we're in a range extension model, right? It should run to rejection block, take out this low. As soon as it takes out that low, I want to see a body break below that low and then use this wick and body as support for the continuation model. The continuation model starts to run down into here. I've got nothing in here that would provide support for 4 hours, so I expect to just see it leave from here. Right? What are we targeting for over here? The last line is right there. So as soon as we break that, I'd like to see that line get re-tagged to go lower. So this kind of hinges on this little box here. And we think about how big this box is. That's the new no-go zone. Once we break it on the downside, it now becomes the new no-go zone. And it's quite large. It's like, that's 600 handles. It's massive. So if we're waffling around in here, that's the zone we can waffle around in. You see how we've come down to the bottom of that little sibby? Never got, once it got broken to the upside, we never came back and filled it until now. So now it's filled. And now if we work our way through it again, we should only tag it once it's been worked. Now I want to see it leave from there. I agree. ICT volume indicator tells us there will be lots of sellers. Be nice. Bless his heart. That's his thing though, right? Whatever he if it's his method and volume is the name of the game, then you know, that's how some people get a read on the market. And you might be instinctively reading the market based on volume, but your instincts are picking up on something else. Anyway, I wish the guy well. I hope he comes back. I really do. I don't want anybody to feel uncomfortable when they come here. I want them to feel like they're actually they're welcome, and that you can come in with whatever belief pattern you've got. Just be open to a change, because we see something that's the average trader doesn't see. All right. So carrying on with our narrative of lower, right? Here's our hourly chart. Here's the hourly range that we're in right now. Well, we're in this range here right now, but overall we're in the larger range. We have a premium box up here. We have a go, no go zone here. And we have a breaker right down in here. Okay, this guy. We've come back to the breaker and we've had a nice little reaction off of that, and we're back in the chop again on the hourly. We're using that 4 hour to leverage going lower. So far, so good. I want to see this little area right here because we're inside this small range. If we can get through here and take out this little breaker right here, which took out this high, we can get through that one. It's just another rinse and repeat on a smaller confined level. So I want to see that get taken out here. Come back, find support at that. Take out this mean threshold, or mean threshold is lowest down close candle. Come back in, find support at that candle, get a range extension down into our discount box right here. And once we see that get broken to the downside, then we're back into overlap target. Use this 4 hour. You see how it's starting to overlap now? Remember that one target we had on the 4 hour? We want to see that is the bottom of the no-go zone once we break through it, right? So if when we come back and retest it, we can retest it within the hourly no-go zone. So we'll have confluences that this should be a good support. So if it just comes back and tags it, we can see it reaching, the wick can reach all the way up into here, maybe even tag this old low here, and then roll over and go lower again. So that's all. The next little area I'd want to see support forming. So that will become the new no-go zone. Does that make sense? This is already the 4 hour no-go. Okay. And we've tagged that. We're rolling over. So I want to see, like I say, see that get broken, mean threshold. Let's get back in sync with sending this lower. That becomes our next target area. That follow with what you guys are looking at right now. And he says True. Just having fun. Sorry. That's okay, bud. That's okay. He's not here, but I just whenever somebody comes in like that and we see it, just kind of smile to yourself and think, let's hope we can convert them. Hadi says 81675, 81675, 81675. Well, you're hitting it now. Good morning, Russell. All right, so let's go to a 15-minute chart. So again, the narrative is lower. Until proven otherwise, narrative is lower. So where are we? See how this chop? This is just, Friday was just terrible after lunch. Or no, after Thursday lunch, it just got really choppy and crappy. This is not something to play in. We're getting some nice clean candle here now. So I want to see this break this level. That becomes the breaker. And here's our 15-minute SIBI. And see how this just becomes a boring, repetitious, rinse and repeat over and over and over again. And you try to make it sexy, but it's not. It's the same damn thing repeating itself. Must be algorithmic, right? If you find yourself reading the charts the exact same way every single day, over and over and over and over again, welcome to the algorithm, my friends. You got algorithmic thinking. You're just following the same pattern. If you're constantly switching it up and you're constantly second guessing yourself, and you don't have that algorithmic whirling around inside your head in terms of your analysis every single day, I keep thinking eventually everybody's just going to say, look, this guy's boring. It's the same thing every single day. That's all he says, the same thing every day. Well, that's the algorithm. You should be thinking algorithmically every time you look at a chart, every time you analyze it. If that's what we're studying, that's what your analysis should be. If you're popping all over the place, you're grabbing new ideas and new theories and stuff, then you're not going to think like an algorithm. I've spent lots of time working on Mark III. I've got over 1,000 lines of code now. And it was just, I'm like, are we greenlighting this right now? Is it ready to greenlight? And it said, just need you to answer one more question. So we waited, could answer the question. I said, yes, it's good. Let's greenlight this. And then I tested one thing on the chain. I added a chaining ladder approach to it. And that's where it went wrong. So now I've been spending the weekend frantically trying to solve this issue. And the last iteration I've got finally looks like it's version 12. That's funny. I think whenever I see it say version 12, I think, yeah, but you forgot the version 1.1, 1.2, 1.3, 4, and then 2.2, and all the way up to whatever. And now we're at version 12. And how many iterations I've had to redo on this thing, but it's looking good, man. It's looking good. We should be able to have a little chat. If this works out today while we're on, I'll stick around and we'll do I've made you guys I've made you a student manual. I've given you a whole modules. It's a modular approach to understanding, not just I've really taken his 3 a.m. stuff and try to add as much logic to it as I can. So it has a student package. So the HUD especially will be quite crazy with this one here. 3 right there. Let's put it on here and I'll give you guys a little peek at what we got. This is a HUD right here. This is the 3 a.m. candle. That marks the 3 a.m. candle. This is the next 3 a.m. candle down here. So what it's supposed to do right now, as soon as that candle closes, you bastard, it didn't do it. This is supposed to extend all the way out as the target. They've already got it in this one, but it's not working in this one. But that's the last, oh, it's because I don't have it set. That's why I stand by. You can do 1 trade per day, or you can do multiple trades per day. You can take the nearest candle, the nearest. Anyway, I'm not going to explain it all to you, but there it is. It does set it out. Yay! Yay! It did it. Yahoo! Okay, so now you can pick a whole bunch of different types of 3 a.m. candles, whether they're filled, unfilled, whether they're nearest or whatever. And what it'll do is it'll chain. It'll tell you when the winner was. If you got into this, it'll tell you where the breaks are. It'll give you your take profit zones. Here's all the places you can take profit. It'll set up the next target. Once this one's cleared, the next target will appear. It will set up all the areas that you can take profits at. It'll tell you when it's in. There's a whole bunch of real cool shit it does. So anyway, that's a little teaser of what we got coming for our 3 a.m. Oh yeah, where were we? Back here. So now see how that 15-minute is now broken that zone? Has broken this downside right there. We're right tapping into this, now becomes the 15-minute. Go, no go. Right? We have a breaker sitting right inside that fair value gap. We've closed right there below it. So you want to see a little tippy tap right there on the low, which it just did. Now you want to see this continue going lower. This is the continuation model. Again, rinse and repeat. Same thing we did from the daily all the way down here to the 15-minute chart. And to AI and LL on NQ. Tool AI and LL on NQ. Don't know what you mean, Russell. Sorry. It's a couple of things that work out perfectly to the tick if everyone is following along. Great thing to see. Oh, you took a long. You took it. I don't know. You took AL and an LL all in, and a Leisure Suit Larry. Like, what the heck should be a reversal? No, we don't want a reversal. I want to see this continue going lower, right? You'll see that when we look at those levels, that we can say, yes, it can run back up into them. Right now, there's nothing to say that higher objectives are being reached right now. If we break this no-go zone on the upside, then I'm back inside this range, and I'm looking at this little target here, and I'm looking for the bull trap right there. So I'd be looking for this to break this, take that, then I can say I'm heading back up here. Until that happens, I am not even remotely looking at these two areas here. Right now, we've got support that's saying to me we should be going lower. And where's our target? If we pull the target from the right to the left, we're looking over here. This is all you do over and over and over again. Just repeat, rinse, and repeat over and over. There's the first D1, D2, D3. So discount 1, discount 2, discount 3 box. So we're just inside the discount box right there. We've just tagged the bottom of it right there, right there. Cut through the candles right there. See it? That's D1 hit. Now we've got the range continuation or the extension. This was the extension. This is the continuation. So we've actually dropped below that candle, and that's it. tiny as it is, that's an extension. We've hit the rule, we've extended it, and now we're continuation. We had a small little continuation. We want to see that continuation to continue pushing for this next level. And then I'm looking for the same thing here. I'm looking for this to freeze on here, come back into that midpoint, and then use it as support to go lower. So it's another extension and then a continuation on that candle. So it's model 3, model 4, model 3, model 4. And then we're looking for the same thing down here. This would be the no-go zone for the 15-minute right there once we break this deeper level. Should be reversal. Asia low. Asia, okay, Asia low and London low. Gotcha. Gotcha. $721 on NQ. 721. Well, your next target is 753 to 738, Russell. Once we get through this level, if we bounce off of here, that's a nice little place to bounce. But you have to ask yourself, in the larger scheme of things, is this 50% of that range? It is. See how we've just dipped below 50% of that larger range? And that's your discount 1, discount 2, discount 3. So here's the first one. We want to see it come back, find some support in this candle in the no-go zone, roll over, come back to discount 2, take that out, and use discount 1 as support to push down to discount 3. That's what I like to see there, there, and then head down. Unless it wants to run straight down, I'm okay with that too. And look where 70% puts us. Right in discount 3. So anyway, that's my rationale for going lower for now. And that doesn't switch over until a bullish run until we get above here. Just so you know. Does that make sense? Does the narrative make sense to you guys? I'm not trying to force fit it. I'm trying to follow a simple, logical, higher to lower time frame logic. Guess the PDA next, 721 NQ. The previous day's low next. Since this is a bank holiday, I would expect us to stay range bound this shorter session. Yes, I totally agree. We could just chop around in here quite easily. This whole area we could chop around in. I don't expect to see it take off on us, but stranger things have happened, right? If we go from today's Mark 3 into yesterday's Mark 3 or Friday's Mark 3, we're right in the middle of it right now. So if we're targeting 731, oh, that's right. So that would be our 15-minute D3. That's your discount 3. That will put you right in that that top right there, puts you right in the middle or the consequent encroachment of the Mark 3 from Friday. Any questions on that? I don't need to go any further, do I? Down to 5 minutes and 1 minute, you see the same thing. I just used the same analysis I did on the daily all the way down to a 5-minute chart. No different. No different. The analysis is exactly the same every day. Ugh, no coffee this morning. So what about ES? Is that following the same principle that we're looking for? Same thing on the 4 hour. We've ran back up into this no-go zone. I've included this one down here as a discount box because we're in this larger range here. And we have multiple little smaller ranges overlapping. So I have to include the next lowest one, which is still slightly lower than this one. So I included the whole thing. So now you want to see this drop below here, come back, find support at that level. And then start range extension continuation from here. And if it doesn't and starts to climb back up, you're inside this range, which is what we're typically expecting for a holiday, is to be range bound. So we're expecting it to be bouncing around inside here on the 4 hour chart. 1 hour, we have to break this consolidation here to the upside. So you need a nice, good, strong displacement candle. Come back down, find this cam model 1 to cam model 1. That's that distance between the two cam models we talked about when I was discussing cam model stuff. You're really hunting the space in between them. So if you can pop it, hit it, run up and down here, that's where you want to get 60 points out of that on a 1 hour chart. But remember, you've got a no-go zone sitting right here. You get 39 points out of that. 39 to 50 anyway, if it got up here. It's this candle's mean threshold. Largest, highest up close candle. And I know we use all of them, but I like that one. It's the most sensitive. And then use it to go lower. Break this one, find support at that one, send it lower still. So all the time we're still in this bearish kind of run. I'm still looking at bearishness, even though we don't expect much action today on bank holiday. Or Dow Jones. We don't give it much respect. We don't really play that one very often. See that displace one more time, pop up into here. Use this as a cam model 1 entry. There's the displacement above this first little displacement candle above this first high. Come back, use it as support to go higher on a 15-minute chart. That one works okay. Bitcoin. Last down closed candle. Like we just saw on here. Last up closed candle, find support. Here's the reverse of that. Last down closed candle, find support. We have a nice displacement candle, right? Trades back into it. Goes lower, trades back into it one more time. Sends it lower. This doesn't get used. We just go straight into a continuation. Those, unfortunately, sometimes you don't catch those. They just take off on you. Maybe a lower time frame you would have found it. A retest of these lows here. Look for a retest somewhere in the lower time frames. This is just daily, so there's going to be a retest in here somewhere that gives you an entry. I think it was right here, off there. You'll probably find something in here. Bitcoin, gold, $5,000 for gold. That's the breaker, or what we call the bull trap. Come back nicely into the breaker, send it higher. Inside that range, you're in a nice big premium. Discount box, trade through it. Little overstep inside the mean threshold, go lower, change in direction, find support, mean threshold, rolled over, close below there, trades back into it, sends it lower. See if it gets through that breaker, and we get another test back down here on this downside. Otherwise, that's a lot of chop going on there. That's a 5-minute. Come up to the premium already. Created a discount. Run back to premium. Look for this discount here and see if you can wait for a lower time frame for reversal inside here. And right now there's not a whole lot going on. Stick with 5-minute. What do you got in there? Yeah, that's no thanks. No, thank you. It's all sideways. What do you want to see it reverse to, Hadi? What's your good morning, Derek? I finally made it over to the hangout. You can hang out in here anytime, buddy. Anytime at all. All right, let's get back here. So we've got our continuation. We've now hit our D2. Now looking for D3. There, see how that little consequent encroachment's been hit? Let's see if we just continue to chop through there or we get a little reverse going on here. So what is it you're looking for, Hadi? I'm talking about M and Q. Yeah. So what kind of reversal? Where are you looking for it to reversal? Look at the hourly, he says. Off of here, you mean? And then where do you want to see it reverse to? What's your target? The 15-minute order block. This one? Okay, this has been hit. So what order block are you talking about? Talking about the breaker? You've got a retest on the 15-minute once we broke the no-go zone there. Well, what's this one here? Was that the first? I don't know what that one is. But the first no-go zone is right here on the 15-minute, which is right at 785. 785 is right here. We drop below it, so there's the retest at 785. That's the no-go zone touch. Continuation. I don't see a reversal coming yet, buddy. $797.25, 797, 797, 797. Oh, you're looking for a retest of that breaker there. Okay, I see what you do. I find it interesting that the ES regular hour gap is below price at 9:30 and the NQ is above price. Ooh, yeah. Make it happen to you for the right now. If it still continues marching, I don't see it doing any reversal until we get through here. I'd like to see that hit that discount, that third one there first, and then we'll see if we get reversal. Because then the reversal for me would just be a small one back into here and keep going lower. So when you're looking at your macro perspective, right there. Like if we stay on a macro perspective and the micro continues to show you that it's going lower, you'll get frustrated on your macro, because it's like saying our daily, we're expecting our daily to return back into here. And yet all these macros are saying, no, we're not going there yet. Not to say it won't, but right now we're saying it's not going there yet. So if you're looking for a 15-minute chart to come back there, you may be waiting an hour or two while we're watching this continue to show you that it's going lower. So until you see that turning, that's not an objective for me. I'm looking for, where's my next objective down here? Instead of up there, I'm looking for, where's my objective down here? If you haven't got in, then you have to say, what could it reach for first before I reach for back there? And right now, there's nothing in here showing you that we're looking for a reversal just yet. If that makes any sense. Whatever. I think that's one of the big things I've had to learn in the last couple of years is higher time frame, lower time frame supporting each other. When you hit a higher time frame objective, go to the lower time frames and look for your entry. And that same logic applies all through them, all the way down to your 15-minute one, Hadi. So your 15-minute logic is, I like to see it come back and retest that. Well, it's already done that right there. That wick, it came back and tagged here. So it's already done its thing that you're looking for it to come back and do. It did it really quickly and then left, right? So that just shows you it's got some sort of aggression to go here. So you're looking for the mean threshold next, which is what we've already hit, or sorry, the rejection block. Then you're looking for this low at 732, which we've hit already, which is the top of the box. So far, so good. Now, once you've hit the discount box right here, do we reach into this little magic zone right here, this little magic point? If we tag that and then we start to pull off of that, so watch right here now. We tag that little spot and start to pull off of it, then Hadi, I start to say, where are we going on a 1 minute? Go to a 15-second chart, right? Well, this is a 15-minute chart. How ironic is that? That is a 15-minute chart. So 15-minute chart doesn't show me anything for retracement. We're still going lower. We're looking for this guy down here. I thought that was a 1 minute chart. It's wondering why those minutes are so long. I'm tired. No coffee this morning. So anyway, on the 15-minute right here, then we're going to switch to, let's switch to a 5-minute or 1 minute. And now you look for a, look at how choppy that is. I like the 15-minute better. So watch this level right here right now and see if we get a nice little, this SIBI continues to form here. We come down, just wick into this, come off of it, clear this, take out our bull trap, get on top of it. Then I'd say, yes, we're getting back into this range again. So you're looking at a 15-minute chart and you're looking for a sign to show us where's our reversal. If that stays open, that's our new bull trap. We're already anticipating. See how you're anticipating 3 or 4 candles ahead now? You're seeing this forming whilst we're hitting a higher time frame objective we want to see a turn at. And something's forming here for the potential for that to happen. So I want to see this just reach into here, give this a little kiss, and then start to run back through here. If not, if it continues to eat through that and takes this out, then that becomes the no-go zone for a 15, and we keep going lower. See how this became the no-go zone? Trade through it, came back to it. That becomes the next no-go zone, trades through it, comes back to it. Next no-go zone, goes through it, comes back to it, wicked through it a little bit. Bodies are still respecting it, went through it. So now this, my friends, is the last of the 15-minute no-goes. There's the little tippy-tappy. Now, are we going to react off that and come higher? Watch here. No, that's not. And it's right on it. It doesn't wick over it. It tags it and leaves. So my guess is we're still going lower. Yes, I agree with you. I'm trying to learn that and stay out of my macro view and micro view aren't cooperating yet. 721. I predict we will see the consequent encroachment of the regular trading hour hit before 10:30. So it is said. So we shall. So it is said. It shall be. Okay, so let's go back to our 15-minute again. That's the bottom of this SIBI right here. That's the little wick you see hitting that. I'm looking at this one as well. That's why I incorporated that one. See what kind of reaction we get here now. Would have been nice little trades there this morning, hey? Let's make a lot of mess here. Let's throw all of these on there. That's easy to read now, hey? Oh, that all makes sense. So the whiny volume imbalance on the daily said, I want to see price again before it leaves, blah, blah, blah. I admire people who can read that volume imbalance and get something out of it, or the MACDs, like they find something that works in there for them. So that SIBI is still holding. It's not turning into a no go down. Oh my goodness. So we're still inside this one here. Now let's go to a 1-minute chart and see if that little level, see if that level held right here. Remember we were talking about seeing this break, see that right there? That's what we were looking for. This, oh no, we were looking up here. So next one forms below. Here's your first little break above, right? We haven't broken it yet. Keep your eye on it. Right there. Wait for a body to break above it. And then your next bull trap's right there. So you want to see that hold, because if we lose the mean threshold of this, what happens? Anybody? Before I tell you what happens if we lose the mean threshold on this. I'll wait for someone to give me an answer. Otherwise, I'll keep it to myself. So the one, is it also the consequent encroachment of the weekly candle wick and daily volume imbalance? Aye. No one's going to answer that question. Fair enough. It's just before the cleaner and nice. It's just before. It's cleaner and nicer than a regular trading day. We've hit Hadid's 8:30 from the Friday. No retest of this. What was the Jeopardy question again? So when we break above that candle's high and we trade back into its mean threshold, if we lose the mean threshold, where would it go next? Trading for $400, Alex. And the daily double. Buzz, what is it, Derek? Derek, for $400, can you answer the question? To the low? You didn't phrase it in the form of a question, and no, that is not. What is the low is the appropriate response. But no, what it is what is a low? No, it is what is the low? But no, it's right here. If we lose the mean threshold, look for the SIBI to be retagged one more time, because once we see this candle break through, if it does not close above that, that's still valid as a wick run. And if it closes above it like it did here, then we're expecting this to tag it. It didn't, it ran, so now we're looking for this one. We always look for the one that gets violated last. And if we lose the mean threshold of that one that's violated last, go back to the most recent one behind that. So watch here. See how the body is sitting right on it here? That one opened up on it. Give it a little tap and send it higher. If it doesn't, then just wait and see. Wait, this is the psych candle now, so notice even though we were looking at this level, this dotted line here, and we want to see it tag it, and we're going to use this one as the entry point. Look at this. So we got it ran down a little lower, and that became the entry point. We didn't get it here, and we're not getting. Oh yeah, you got it right there now. So now you can go along there because it's the last one. Your stop loss would be one tick below that low, and then just let it run. As soon as it takes that high there, pay yourself, move to break even, and say, I don't want to see it come back through here now. You want to see it leave. Or you have to say, I don't want to see that mean threshold get broken. Let it go. So you'd be a risk-free trade now. You took a couple of bucks out for yourself, and now you're zero stress. You're one for one. 1 or 1-0. Pay the trader. That's the next bull trap, so you got to get through there. And away you go. I hope you guys are getting some cash on that one. Where did you get in, Hadi, on your turn? Was your turn down here? Did you get a 15 second? Did you get a perfect entry, or did you just jump in expecting that for a reversal? Because right there is our entry. Pay. Move to break even. I would move it right into here now. Now that you've got that, as soon as it breaks that high there, or pay yourself at the rejection block. As soon as it breaks that high, pay yourself and move your stop loss right up in here. You don't want to see that. You see this little propulsion candle act as just that, just to leave here now. Now that we're above that high, that would be nice to see it stay open. You couldn't have got in at 17.26 unless you followed the, unless there's a 15-second one there. There's nothing there. That's right, unless you are into that. If it opens and closes on the same thing, I'll take it. Because both of those, that one closed on it, that one closed below it, or opened on it, or sorry, opened below it. So there's no entry there for me. That's the only entry we talked about right there. Pay yourself. Move to here. So you got a small chunk of your profits in your pocket already and you're zero stress. Now I want to see this provide support. You could take your stop loss and move it to one tick below this low here, or one tick below this cluster right there, which is actually better off leaving it there. So now that's a long. I'm going to go long there, just off the top of that high. And the stop loss will go just below that low. See, we're right inside this last little bull trap right here now. Yeah, you probably used the 15-second chart. Let's have a look at the 15-second chart and see where that would have worked. So first little structure break right here, body trades above it. There's your 15-second entry right at that midpoint we were talking about. Look at that, right on the money. Burp. You leave. If you waited for the bull trap to get broken, the next bull trap to get broken with the fair value gap, because there's a fair value gap here and a nice little displacement candle above here, tag it, go. Here's the next entry here. We close above it right here, tag it right there, go. Close above the bull trap right there, tag it, go. You have multiple entries on a 15-second chart there. Multiple entries at a key point we're looking for a turn. So this has to hold for me now. If I lose this, we're coming back to retest this guy here. How long do you wait to put a protective stop in on NQ and ES is time or price or PD array. How long do I wait to put a protective stop loss in? Well, if you know the level that you want to see price hold, like you don't want to see this breaker or this bull trap get broken to the downside, then you put it just one tick below that low. I should take off one here because it just just broke the high, so I'll pay myself there. I'm just going to move to the bottom here because I don't want to see this get taken to the outside now. So I put a protective stop in as soon as I see that as soon as you see the level that you want to see price hold at. In other words, we want to see it break the bull trap. Then you put it below the bull trap because you don't want to see it come back through. And if it does, then you have to be okay with saying I'm on the wrong side of this and get out. So now this whole candle should act as support. If it doesn't, then it'll come back. And that's where my stop loss is so tight, because I want to see this act as support. If it doesn't, then it's not giving me what I want and I'll be out. And now we've closed above the bull trap, so you could put your stop loss right there, one tick below that low of that last candle there. Or you could put it below this one if you're looking at, no, I'd say that one. Just below that. So a PD array, yeah. A specific PD array, yeah. Ladies and gentlemen, ding, 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 silver bullet time. Get your wagers together. Come on, you gotta get up there now. Get some legs. Just don't forget, we've broken a high now. These little highs, we keep breaking them. And now we've got a BISI forming right here. So always anticipate that if we don't start seeing this push up higher, then this is the potential to break below here, break market structure, and for us to run back into this range. So I want to see it really start to get some legs here. Get out of Dodge. You're welcome, Lucky. No worries. The thing is, if you can explain the logic to yourself, Lucky, and you see and understand that, like I just gave you I got to be careful here because this, I don't want to see us break below here. This candle's not validated yet, so we've already tagged these. I don't want to see it come back down in here again, but it could roll in here, tag me out, and then go higher. But this is what I want to demand from the market. So I do not want to see it get back down into this BISI. And there is a SIBI there. I have to put it here. I have to put it below there. So we're going to see it really pick up the pace now, because there's a little SIBI here. We could come back, tag that, and still go higher. But see how we're into this candle? It's been validated. We've come back in. I don't want to see the mean threshold of all three of those candles get taken, which would be somewhere around the midpoint of this. So I want to see that, just specific data points. I want to see them bounce off of here now and keep pushing higher. Just get above that candle, validate it. That gives me a little buffer, a little breathing room. Now I can move to here. Because now I don't want to see, now that we've hit here, I don't want to see this come back through here. So I want to see that close above there in the next 3 or 2 seconds. Go, go, go. Nope. We did get a wick there. So the mean threshold of this candle I don't want to see used. So right now we could run back through here and tag that, but that's good. Little buffer. Let's go. Keep running. We've activated that one right there. So that 1, 2, 3 levels right there. And that's the, if you lose all 3 of them, then we're probably going to come back through here. So now we're at least break even plus. Now this one's been validated. And that's it. Now that I can get into a stress-free trade and I've already paid myself a portion, it can do whatever the hell it likes. I've got an upside objective now. So let her buck. Let her buck. Now, if I use my take profit model 1, and I'll tell you why I'm going to go to here. No, I guess I have to go there. There's 50% already. So we're above 50%. We're waiting for 62. It can come back and tag us at 50%. I don't want to see that. I want to see us hit 62% first. I'll take another 1 off there and let 1 more run. Because we're over 50%. That's why you're looking for a reversal, Hadi. What's your reason for a reversal? Oh, because you've tagged this one here. Yes. That's a good point. I'm going to take one out of there. It's a good point. That's at a higher objective. So now the higher we can go up to 70% optimum trade entry reversal. Will put you right in 50% of that. So this, I'll just drag that last one up behind it. If we hit 70%, then I'd be looking for like an optimum trade entry reversal there at a perfect place to see a 15-minute tag. And there's also a no-go zone there too. You're right. Just wait for the setup, man. Wait for the setup. Now I'm going to move this to here. You got stopped out too early. How tight was your stop loss? Where was your entry, Lucky? I'll try to show you the narrative behind your entry and where the data points were, just so you see. And it's not to make you feel bad. It's just to show you, here's the logic. And then you have to ask yourself, are you trading on emotion? Are you trading on logic? Are you looking at specific data points to hold your price back? Because there's no emotional reaction. If it comes down and takes me out now, there's no emotional reaction to that. It's like, whatever. Okay. We're expecting that turn. Same place Adi was just mentioning, right off that candle, that midpoint of this breaker. We didn't even hit the midpoint. We just hit the bottom of it. That's fine. Now we look for a reversal. So what I want to see is I want to see its breakthrough here on a close. Use this as support, and we'll start coming back into this range again. Just shy of that 62% there. You're afraid of losses. Yeah, well, there's emotion for you. It'll kill you. It'll kill your trades, man, if you trade emotionally and you trade through fear and not just, otherwise all you're doing is just waiting, watching, you're staring at the price, the money you're making over here or the money you're losing over here instead of the specific data points. That's okay, Lucky. You're just, it's an evolutionary process, man. You just got to know, you just got to know when you got that, that issue and start working on overcoming it. So right now we've got a 15-minute level we want to see a reversal at. I've got 2 bull traps that are holding price to go higher. So your question then is, do I rely on the higher time frame or do I trust the lower time frame? Well, if the higher time frame's holding, then I should see these 2 give way and I should see this break to the downside, and then I should see that get used to go lower. So like we did here on the way up, we're looking for the same kind of thing here. The first one that validates, then that's the one I'm going to use to trade back into an area that never got hit, never got hit, never got hit. So those are my targets. Those are my ripe targets for higher time frame, lower time frame turn, break through these little clusters of noise, give me a nice little displacement candle here, preferably with a fair value gap. I can come back in and revisit it and send it lower. Right there. Right there. I want to see it stop right there. And that's on a 12 candle. So that should be the stop right there. Send it lower. Yeah. That's the one there. Once. It needs to close below here. There's 959 low. You need to see it close below that. Not just stay sitting inside here or this little sibby right here. You stretch it out, you'll see it sitting right there. And that's what we're kind of, we've wicked through it. So it kind of gives me a little indication of where it wants to go. That 12 was the one we wanted to see hit the mean threshold. It said stop right there. It stopped right there. It's coming lower. That's the point you want to see. And it's on my tibs. So perfect. Lining up nicely. Now I want to see 14 drop below here. And then 15, 16, 17, or 16, 17, 18, 19, the squabblers. I want to see one of those squabblers come back into here, tag it, and then send 21 down. And then you have this 27, 30, 32, and then they have 30, 32 break this and come back into Crazy Ivan. Okay, so that was the nice little stop right there. Now I want to see this get broken down here. That's specific data points, man. Right on time and price. Love it. Here's 14. Make the low. Delicious. Now the squabblers can come back in here and wrestle over who wants to take that. All the way to here. Equal lows. yet, no close yet. Confused. Now I'm bullish looking to buy lower. No, you don't want to go. You're bearish now. Now we've closed below here. So what, you want to see this one come back up and tag here. We're bearish inside this range now, and we're bearish off of a premium level here. Like a higher time frame level. Because until that gets broken, then we're not worrying about the next highest level. We're just supporting lower. And this is supporting lower. Right now we've just broken that. So I want to see this wick come back and just tag that. Or remember we said we want to see a fair value gap. So this would be 14, 15. So 16. If it tags it, I'll go short there. Yeah, 16 you want to see just come up in here and tag this now. 16. Right there. Stop loss will go right here, right above the breaker. That's that one tick. Put another one in there. There's the little no-go zone right there. You don't want to see it break through that. So that's a little tag. Send it lower. So watch here now. We want to see it just keep coming lower. I don't want to see it starting to come back through here. It's got to leave from here now. So my no-go zone now becomes my, I don't want to see it break through that. We hit this bull trap. So that's my, as soon as it hits that one, I'll take one off there. I'll take one off at the rejection block. So pay yourself. If it takes out the low, then this becomes the new no-go zone. And let's see it keep coming lower. So you got your partial out now. Now I'm going to move my stop loss to break even plus the cost of the trade. So it's a risk-free trade now. And you're targeting this stop loss down, or this down here. If you're pulling your fib on there, your partial, like Hadi just did, take your partial out. That take profit model 1 is awesome here right now. You trade from here to here. Pay yourself at 50%. I've only got one left on there, so I'm at break even plus the cost of the trade now, which is where you would be if you had 50%. Now if I hit 62%, I'll move to 50 because I've only got one on, so I'm just trailing the stop loss now for profit. Or if it hits the target, then it takes the target. You get your money, and then you wait. Works beautiful. Hey, Hadi. This will be a box-to-box trade. Box to box. Premium to discount. Oops. Was that a silver bullet at 10:15? 10:10 is usually around 10:10 to 10:15 is where you usually find your silver bullet. For me, I know Michael calls them just after 10 o'clock. The first fair value gap you see after 10 o'clock. And there's just one right at 10 o'clock here. Then you look at 10:10, 10:15. This 10:16 here, right? And the Tibbs enters into our zone. We wanted to see that hold. It held. So that's the reverse one. That could be your silver bullet. I don't know. What do you think about that, Derek? Do you wait for the first fair value gap to occur after 10:01 or right on 10 o'clock or 10:59? There's 50. And there's done. Done and dusted. You gotta love it, Hadi. Gotta love it, my friend. Gotta love it. So now we just wait for our next setup. We've traded internal range liquidity. Now we'll wait for our next setup. That's going from box to box, premium to discount. Did you get paid? Yeah, but it has to agree with my rule, but only at a discount and only sell at a premium. All right, so there's 62%. So you'd be sitting at 50. Now, if we can get to 70%, you'd move to 62. There. Now you move to 7. Now get ready to move it again. If you don't got that one left on there, you're sitting at 62% right now. 70%. We're looking for this next level down here at 79%. If it comes back and tags you out at 62, you're done. You're done. You're done. You're done. Done, done, done. That's back to that. Remember that level we said that didn't get hit? It just got hit. And where did it get hit? Right in the mean threshold. And now we're getting a reaction off of that. You gotta love box to box, man. I love that trade. Just one, but profitable. That's the way to go, Russell. A lot different from a couple of months ago, hey? Just stay focused, be patient, wait for your optimum entry, and those data points, if they hold, like we were talking about it, said it has to hold right here. We talked about that one right as it was happening. I said freeze right there. It's got to go lower from there. And that's the point you want to see it. So those are specific data points. There is my Tibbs data points at perfect times. Bing, bing. Right on those data points. Tell me that's not freaking precision. Amazing. Amazing. Time and price manifest right there in front of your eyes, my friends. Pay the trader. So now you ask yourself, how do we get back into another trade? Wait for the go, no go zone. Wait for the discount box to get traded through. It becomes the new no-go zone. And then start trading model 3 and 4. 3 and 4. Wasn't that a delicious little place, Adi? It was nice, beautiful. We took some off going up. Now we took some off going down, and we turned it logical places. So even if you're on the wrong side of that trade and it's going lower, and you're sitting on that in the higher time frame, that's how you capture right there. Oh, right here. Where was the one that we captured? Stand by. Where's the first? Did we not capture a first long manifested itself? Oh, right here. Right there. That was the first one we talked about. That was the legitimate long. So you catch long there. Target. Wait for a reversal. So we unloaded some positions here. Waited for the reversal. Got the reversal. Tagged our entry points. Sent it lower. Trading internal range. Beautiful. It's a box to box that's delicious, my friend. It's filled with chocolates and goodness. Ba-boom, indeed. Just tag that 79% right there, and that'll be the ultimate box to box. That'll be like extreme premium to box to the extreme discount. This becomes the no-go zone. Roll over here and come lower. If we lose this on the upside, then we've got to change in direction here. We've got some lows that are taken. And we get broke to the upside. This becomes support, and we start get back inside that range now. Now you're trading, and we're compressing. On a bank holiday day, we don't expect any big range stuff. So if you're catching a small little range bound stuff, small range is enough to grab from 700 to 780, 50 handles at a time. So you're watching here and watching the bull trap. That's a retest of the no-go zone right there. Now come lower, and let's hit our 79% all the way down to 88%. You catching this, Lucky? Do you understand some of the logic we're giving you here? There's 79%. Pay yourself. $765. 765 is my next downside target. Once we get through here, of course. $567. What is that one, Hadi? I got 547. That's the edge of the daily volume imbalance, or daily fair value. Yeah, there's 88. Almost tagged the 88. You'd be pulling your stop loss into break even plus the cost of the trade now, and you would have paid yourself at 78. Now, if you can get to 88, you pay yourself again. Ding, ding dong. Good for you, Hans. Nicely done. Nicely done, son. There's 88. Send it down. Let's send it lower. All right, so this is a Model 3 now. That's a Model 3 entry right there. And as usual, TradingView is fucking around here. Look how long it took for that to put my entry in. I'm still waiting for the second one to come in there. Now, there it is. Put another one in here. And stop loss will go above there. As soon as I get one down there, I'll pay myself at the, well, oops. Pay myself one there. Move the stop loss to break even. And now we just let it run down. This is the range extension model now. Well, I guess it can come all the way back into there and tag me out. So we'll let it hold right there. I'm teasing it now. That's the mean threshold of that candle right there. That's when I want to see it hold and stop. It'll probably tag me out now, but I'd like to see that hold. Talk about standing in front of the freight train now. Got me. That's the range extension. So now I want to see a continuation model. So right here, I'll put one on there for a short for continuation. So that was Model 3. It's a small model. And then the Model 4 is the... Now that was the range extension model right there. Now this is the continuation model if we get it. Sure is pissing me around with this exit. So now I want to see it just extend this range here now, or continue the range. And you're looking for 767 or 677, 676. As soon as it takes out that low there, I'll move that one position to break even, and then see if it just carries on from there. Just drop below that candle. That's good enough for me. That'll pay for the trade. Let it go from there. Now that's see how we had that little pop through? It may be all you get for an extension, or for a continuation, I should say. So we've caught lots of little trades today at logical points when the data's clean. That's what you want to see. Now I don't want to see that mean threshold get taken. Otherwise it'll come back and take me out there. Thanks for today, Darren. See you tomorrow. Much love, Hans. Thanks for tuning in, man. Appreciate your time. When does it become a range extension? Lucky, just follow them. That's out. That should close out there. Once this trading view catches up to the trade, that should pop off there, because there's no way that spread kept me in there. I'm going to close it out. I don't trust them. Again, I'm looking for down here at 676. It's the bottom of the 3-hour candle. And lots of times it can just hit that and get a nice clean reaction off of that. So finally it removed it. What did it give us? Oh, it did give us the 150. Okay, whatever. Whatever. There's another little continuation, a little tiny pop through. And we're sitting to see how where we are in our 15-minute ones. We're right at the bottom of the 15-minute. We have not broken it yet. That's why you got to be careful. We're looking for the range extension. We've finally got the extension right to the edge here. And then you want to see continuation. That's all we're getting for continuation. But the bodies are still respecting it. I want to see the bodies break through this. That would be that no-go zone now for the 15-minute, and we're not. See how we're freezing right on it? So you got to be careful, because if it turns right now and goes back up on you, it told you, hey, man, I had no intentions of going lower. So you got to think about think about all your overlapping higher time frame perspectives. Here's my 15-minute. Let me put it back on there so you can see that. Remember the ones we drew out here? We haven't had a body breakthrough here yet on 15-minute. We haven't even had a body breakthrough there on a 1-minute yet. See how it's pulling back? That's why you got to be careful. You got to be careful. Got to be nimble, man. And if you're chasing my trades because I'm taking them and you're still in it and you didn't take it out when I took it out, then you didn't understand. You couldn't read my mind with a logic. That's why you have to have your own. That's why you don't chase somebody else's logic, chase somebody else's trades, because you're not in their head. You don't know what they're thinking. So don't copy my trades. Unless you hear me tell you my logic, exactly where I'm going, why I'm going there. Don't take the trades, man. Have your own logic. Now, if we can come back to right there at 701, see this bull trap right here? Or sorry, this go no go zone. If it hits this, you want to see this hold price right here. I'm not bullish until we get through that. That's 701. I'm looking at 701 to get strength to go higher, and I'm looking at this to get strength to go lower, or support to go lower. So I can argue two different directions right now. This for this continuation to keep dropping, and that right there, that high, and this mean threshold to send it back through here. Because there's no SIBI here except for right here. So then this becomes the first bull trap, second bull trap. Time is the key. We'll wait for the next macro. There's the 01, 02. That's what I'm looking for there. Now I want to see it go higher or come through here and take this little tiny guy out down below us here. So if that's going to go higher, I want to see it get through here. If that's the turning point, then that's what I want to see happen right here. Those are the two data points I'm looking for to either send it higher or send it lower. And therefore I'm not in a trade because you're gambling if you take one versus the other, because there's nothing clean there yet. Anything can happen indeed. So look right there, stop right there. If you're going higher, stop right there. She didn't. So look at this little guy right there, little poppy. Pop through it. Don't just touch it. Pop through it. And then you can send it lower. That's delicious. Now come back and give it a kiss. Now we've got an extension. I want to see a continuation now. So give me a little freeze right here. Come back, give it a little tabby. Tippy tappy right there. No, you're through it again now. Take it right off the premium there. You have to actually be above that. I'll take another one there. I'm in the premium box now. It's got to roll over and get back through here again now. Otherwise, it's coming for me. If it closes above here, I'll close it out before it comes to my stop. Now it's already above here. It's come back and retested it. It's out. I'm on the wrong side of that. We were in above it. We've come back, tagged it. I'll wait for it to clear out. It'll have to clear out the zone now for me to go long on that or short on that again. Yeah, it's not fully, the SIBI hasn't formed yet. Well, the SIBI's formed, but the trade hasn't set the long yet. If we break above here, then that's definitely a nice 15-minute run. See what I mean? It retested this, went higher, so I was on the wrong side of it. Now I want to see it break this on the upside, and then we can start running back into the SIBI some more. You break that SIBI on the upside, use it as support, and start pushing for the next range. Then we can get back into here. I like to see it hit the 15. Well, you want to see it hit the 15-minute and roll over and come back lower? That 732 would be nice. It puts you right back inside this bull trap, or this, look at that, right into the top of it. So I'm still not bullish yet until we get above here. We did have a change here. We came back, retested it. That's deeper inside the range. We've closed above that level. We want to see it come back and retest it. Very close, but didn't. Now you want to see it push through, and that's the next level there. If we close above this, watch for a retest to that. 4, 3, 2, 1. Opens. Here's your new macro beginning. I am long, not sure why. That's okay. You're inside this range. You'd say, yeah, you are potentially long. You've broken that high. You're finding support off of it. You got to go now, Lucky. Let's go, Lucky. Lucky duck. You don't want to see us break through this level here again now. You got to see that get some legs here. It's come back. It's retested this last up close candle right at its mean threshold. You do not want to see it break that point right there. That candle's the candle that we're on right now. It's low. You don't want to see it break that. It's got to leave here now. Away you go. Let's get Lucky some luck. There you go. Tag it. Now go. Go, go, go. There you go, Lucky. There you go. Oh, did you pay yourself at the high? I don't know where you got in. But if you got in off that candle, you pay yourself right there, move your break even, and then let the rest ride so you're stress free. You're not sitting there shaking and worrying about fear. And then wait for your next data point to get hit, which is right there. 525. I guess you got mean threshold of this candle too. So if the stop loss is sitting here, there's mean threshold there. Ding, hit it. Now I want to see it keep pushing, not reverse it here. Yeah. Keep going, keep going. Keep going. Look for 725. Your stop's in place. Are you in break free, or are you in a stress free trade? There you go. There's 725 done and dusted. Now let's see if we can get to 732. 732. So if it's a target, it's a profit. Take profit or move your stop loss accordingly. And to me, there's no real key place to put your stop loss right now. So pay yourself on the way up. As long as you're in a stress-free trade right now. Let her buck. Unicorn set up on the 1 minute. Unicorn. 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 Where's your unicorn? I don't understand some people's unicorns. I don't understand your unicorn there, Hadi. I know people have various different types, but you're looking for a short here now, Hadi? Is that what you're looking for? You're inside your SIBI here now. That's a nice little institutional order flow entry drill for a continuation on the downside. Lucky wants it to go higher. You need to break this one here now, Lucky, and you need to break that 732 we're talking about right there. Time and price right on the 52 candle. Beautiful. Pay yourself. And then see if we can send it higher. Internal range liquidity hunt. If you're doing your internal range liquidity, look for 50%, 62%, so on and so forth. Yeah, that's a nice little institution. So now what you're looking for is a reversal up here. If that's your higher time frame target, and that was our two targets here, that's the next no-go zone, and that's the one you just hit. And it's right on a 52 candle. Price, time, and price. Three-point stopped out. At least you're risk-free, man. So it's got to get back through this level here and get through here. Find support at that and start running lower. I'm glad you're learning, man. I'm glad you're learning. Right on this here. Change in direction. retest, send it lower. Nice. Box to box, internal range liquidity, we're looking for right here, right there. And it's on a 55 candle. Ding dong. Box to box. Perfect time, perfect time. Oh, I love the little time in a bottle. It's lovely. Now I want to rip through here because what are we at now? 56, 58. Let's take 58 through here and look for this target here. Right there. Now let's send it deeper. I want to see these rejection blocks get taken. And I want to see 58. Now this is 56. Revisit here for continuation. That's traded below it now. Risk free, let's go partial. Love it. Told you, looking for N56 567. Indeed, you did. This is 58. I don't want to see it go lower now. Give me a zero then, the double zero or two in here. Just ran into a little institutional order flow entry drill. I'd like to see 0 or 2 get up into here. Very nice day, Darren. Thank you for everything, Darren. You're very welcome, Hadith. As usual, man, follow the rules. Follow the rules. Follow the penguin, my friends. Follow the penguin. Done for the day. Yeah, my legs are bugging me today. It will. The money will come if you follow the rules. There's 00 or 2. See you tomorrow, Hadi. Just gonna see if this trade pans out. If this does, great. If not, I'm done today too. Right back at you. Right back at you, my friend. Right back at you. I'm out of that. That's already hit the objective I'd be aiming for. Somebody. See you later. I think I'm out of here too, Darren. Thanks for everything. See you all tomorrow. See you later, Abs. You see how we hit the bottom, that rejection block again? That's what I was targeting for. Had I got my entry here, I would have targeted that right there. Right back at you, my friend. Right back at you. So that would have put me at risk free. So if it would have come up just a little higher, took me in, I would have aimed for there, took a portion off there, moved to risk free, and just let it run, see if it continues on down here. But didn't give me my entry, so. Keep your eyes on that area right there. I think that's going to be it for me, you guys. If you get a bounce off of this, it's too much chop here. I'd have to wait for it to break market structure down here. It's still hanging in that 15-minute level there. So, and this is really still discount. So if we can get back above this, then target the premium box. Otherwise, there, see it's running in there now. I would like to have seen that over here. Then I could have run for that. And now we've got a wick through here, so that tells me we're going higher. Watch for support off of here, come back into this range, and then see if we can start working our way through this, because right now we're just bouncing around inside this small little range here, which is that 15-minute fair value gap. Discount box we've been waiting for it to run back into for a while now. So anyway, that's the 7, so 910 should put you up in here somewhere. Thanks for tuning in, everybody. Appreciate your time. Like, subscribe, thumbs up. All helps the community. So you're welcome to join us every day here. We're here to help you read the price action cleaner. See how there's a retest of that zone now. So now you're looking for a run higher. And higher she goes. So anyway, I hope you enjoyed that today. And I will see you guys bright and early tomorrow. Tomorrow, I hope we get some better, nice clean price action like we had today would be nice. Small little runs, but they're profitable. If you you can work them, you can still haul $1,000 out of the day. Just waiting for your perfect entries that we talked about. They're there, right there. Now your premium box is done. Entry, exit, done. Wait for the next setup. And that's just 17 handles. 15 handles. That's it. Move to the sidelines. Quick little internal range liquidity hunt right there, all in one candle. Anyway, hope you enjoyed it. Thumbs up, like, again, subscribe, notify, and I will see you guys tomorrow. Thanks for tuning in.